In this video, guys, we're going to look at 7 reasons why you shouldn't swing trade. Stay tuned. Hey guys, warm welcome to you. Alright, so for full kind of balance here, I have done another video which is probably going to be uploaded very shortly if it hasn't already, so make sure you are subscribed to the channel to see that, where I take the opposing view and look at day trades, why day trading is not so good. So this is kind of the idea. There's a few videos out there like this on the channel where we talk about kind of finding your own groove, finding the reason you should be, or finding the time frame you should be trading. Should you be trading kind of shorter term time frames or larger time frames? And so some of the things here in these 7 items that I've listed, by the way, add your 8th, 9th, 10th in the comment section below. Let's hear what you guys got to say. All these kind of opinions are valid on this type of thing. Is, you know, it makes you look a little bit closer about the type of trade you're making and makes you think, am I comfortable with that? If I'm comfortable with that, then I'm going to take it. If I'm not, maybe consider not trading in that direction, because there's pros and cons, guys, to day trading and swing trading. All right, so the first one we've got here is the overnight/weekend risk. Now, I'm going to talk about something that's very similar in a moment, but this is the underlying big thing, is that you have overnight risk. Obviously, you're trading stocks, you're going to get a gap overnight. Not so much with currencies, because they're trading 24 hours a day, from Monday to Friday at least anyway, so any movement overnight, unless it's really dramatic like we have with the Swiss National Bank, you're probably going to be okay, just going to be stopped out. But you still got weekend risk, right? It's still going to be, most of the time, there's going to be a time when you can't execute a trade, and when you have that, what you're doing is you're giving control up of the risk. You're losing control of the risk because you can't do anything with it. You can't execute at all. So as long as you accept that, there's a benefit to it as well, potentially. The market gaps up in your favor if you're long, or gaps down in your favor if you're short. So it's not always a bad thing, a negative thing for you, but ultimately, you need to accept that you've given up control of the risk whenever the market, the underlying market that you have a position in, is closed. That could be a negative, that could be a positive in terms of holding positions that go your favor. But ultimately, you know, there's a risk management issue there, isn't there? And number 2 is sitting through periods of drawdown. So I mean, really what I mean by this is like, okay, you've got a trade, and you know, let's say it goes in your favor very nicely, but you've still got quite a long target on this. You might have to sit through, you know, multiple days of it drifting lower and lower and lower, still not upsetting the chart pattern or the reason you're into the trade, but you have to be prepared for that. You have to be able to be patient enough to ride that through. Or even if it's just sitting at your entry and not going away, you can't be as impatient as perhaps an intraday trader who might wait for 15 minutes, 30 minutes, doesn't quite go their way, they're out. Or even if intraday trading, you've literally got from the open to the close, that's your lot. So really you have to sit down maybe through an hour, a couple of hours of drawdown before it continues. It's not as much to sit through as potentially a swing trader. Now, listen, this might be considered as a positive, because if you're completely comfortable with this, then you don't have to do anything. There's no extra decision making to be made. You're just sitting with it until X is hit. But if you're the type of person, type of trader who's constantly looking at your P&L, constantly looking at your positions, you know, oh, every little tick's kind of getting to you, then, you know, maybe consider not swing trading. Number 3, guys, intraday trade can be better. What I mean by better is that, you know, when you get an intraday chart, that literally, you know, imagine this chart here. Let's say we'd opened up, you know, here we'd push right up and then we push right down, or we pushed up and down at a doji type day. From a swing trader's perspective, it's opened at the same point or closed at the same point yesterday, closes at the same point today, but it really, intraday has been so much opportunity. It's flown up, it's flown down. Now listen, nothing to say as a swing trader you can't use that to time your entries and exits after your multi-day hold, but as a day trader, that could be the very best type of day for a day trader. You know, volatility to the upside, volatility to the downside, lots of rotations in the middle of the day, capitalizing on the opportunity, taking some on the up, taking some on the short, and making money that way. Swing trader, if you're holding from day to day, there's technically no movement there, and actually it can work against you. So ultimately you can get stopped out by that kind of thing, when really it's just noise intraday that day traders are thriving on, as opposed to being a benefit to swing traders. So it's something to think about, and that depends on the market, guys. Sometimes the market's very violent intraday, and there's no gap. Sometimes we go through phases where it seems to be big gaps which are favoring the swing traders who are positioned in the correct direction, but very slow movement. It's kind of intraday. Something like the ETF or the ADRs, especially in the US, do a lot of gaps, obviously, because of the European trade. So what have we got here? Number 4, you need more capital to hold multiple positions. You know, generally speaking, swing traders, this is a generalization, but generally speaking, swing traders will have an array of positions. You have maybe 4 or 5 positions, if not more, that you have. Sometimes they're correlated, sometimes they're not correlated, irrelevant. But the point is you need a little bit more margin for that because you're holding these positions, margin requirements are a little bit higher. Day traders, again, generalizing with day traders generally will have 1 or 2 positions on. They'll be focused on 1 market, 2 markets. Obviously, there's some traders who trade slightly differently, but the margin requirements then, especially in the overnight, you haven't got any overnight holding requirements, a little bit less. So yes, you might trade a little bit more size potentially because you're trading smaller moves, but you haven't got as many positions, you haven't got the overnight requirements, etc. So, and also it depends on which broker you're using, how you're getting access to the market. Some brokers, have a very low intraday requirement if you're trading futures, for example. Some brokers don't adjust that at all. So something to consider potentially depending on your strategy. Number 5, you can't take advantage of counter trend moves. What do I mean by this? So you can, as a day trader, go and fresh in the day and say, right, we've been up for 20 days and now we've got some downdraft coming at the start of the week, maybe Monday, Tuesday, half of Wednesday's like a down move. You can jump on that, you can press the short side, you can play that game, you can take some money off the table, and then you can resume with the longer term trend kind of later in the week or however you want to play it. If you're a swing trader, unless you are coming out of the trade and back into the trade, which is generally not considered that advisable because most swing traders will say to you, when you've got your position, don't get shaken out of it while it's still within the realms of being a reasonable trade. It's not hit your stop loss, it's not hit your limit, or it's not done something crazy. You have to sit through this kind of stuff. Whereas a day trader can obviously take advantage fresh each day. Big heavy down day, bang, you can get on it, start hitting some shorts, pressing some shorts. Swing trader, if you're long, it might be damaging a little bit, but you don't want to come out of the trade completely yet, so you've got to kind of sit with it, and there's nothing really you can do about it apart from sit with it, unless you're trying to be clever and kind of take it in and out, which generally is quite hard to do and end up getting shaken out of your position. Number 6, guys, you can never really switch off. It depends on personality. Some people are quite comfortable with this. They can switch off even though they've got big positions on overnight, over the weekend. Day trader, if you've got no positions on, you don't care what's going on with the market. It doesn't matter. You haven't got a position on, whatever happens is just opportunity. If it's going crazy, you're going to have opportunity the next day. If it's quiet, you're not maybe going to have opportunity. Whereas if you're swing trading, perhaps you're always in the back of your mind worried about the position. And even if the market's open, day trader might be done for the morning, goes off, does something else. Swing trader, you've always got to be mindful that something can happen in the afternoon that adjusts the price of your positions. Now, of course, depends on your personality type, depends on your position size, depends on your holding time, all this kind of stuff. I get that. But it's something to consider, and perhaps a reason why you shouldn't swing trade if you're worried about being able to switch off and completely kind of not think about the market at all, which actually, let's be fair guys, we're all traders here. That's hard to do whatever type of time frame you're trading. Number 7, surprise news can wipe out gains. I've seen this with a lot of my swing trading buddies. They're in a trade, it's working really well, and especially when there's news-driven market. As I'm filming this, we've got so many news-driven things that hit in the market. We've got Brexit deal, we've got Trump, we've got just fields of stuff that's just hammering the market one way or the other. And it's frustrating them. They're sitting with trades for multiple days, all of a sudden out of nowhere, bang, you get like a massive 2-day sweep that takes out all the gains or whatever it may be. And that can, obviously depends on the market conditions, depends on you watching this video, all this kind of stuff needs to be taken into account. But surprise news wiping out gains, it can be frustrating as a swing trader. You've sat there for days, all of a sudden something surprising comes out and takes it out. It's annoying. Does it happen as that much? Maybe not. Maybe we're in kind of unusual times at the moment, and we probably are. It doesn't normally happen, but it can happen, and it's something to consider and a reason why you may not want to swing trade. Whereas a day trader can take advantage of that kind of stuff. It goes in flat, looks at the day, and hopefully takes advantage. Now, of course, we could lose money as well. We're just making the assumption here and just for generalizing that you can take advantage of it. If you're not that great and you kind of trip over yourself a little bit, and you still could not be a good reason to be a day trader. But anyway, swing trading, guys. 7 reasons why you shouldn't swing trade. The overnight risk, I think, is the bigger one, and also things like being able to take advantage or not having them to your favor. Some of the intraday moves, sitting through periods of drawdown, a bit of a personality thing and a bit of an operational thing there. If you've got any more, guys, you want to add, feel free in the comment section below. What have I missed? Maybe you want some swing traders out there going to defend this, defend themselves and go, hey, you know what, I don't believe that one, that's not right. Or maybe someone's going to add something and say, yeah, you're right, there's going to be an extra thing there. By the way, I'm not saying you you should be one or the other. This is purely for you to say, hey, okay, let's look at the pros and cons, day trading, swing trading. There's no perfect answer for everybody. Everyone's different, but some things to perhaps consider. Take care out there, guys. Keep your risk managed. I'll see you in the next one. Bye-bye.